Thank you, Dr. Andari and Omar. Hall B workshops are now open, but we have a small change in the agenda. So the FinTech New Trends and Innovation panel will be at 1. Our first panel for the day is going to be redefining the retail experience, both offline and online. This panel looks at the future of branch as a retail experience, the technologies available today, and the opportunities that optimized branch experience can create for the banks. We would like to share a small video prepared by ArabNet team. All right. Please help me welcome the CEO of Wardrobe Place Capital Management, Hadi Kabalan, who will be moderating the session.
Gentlemen, hi. I'm Hadi Kabalan. Been an investor in technology companies as well as banks for about 20 years, both fintech and traditional, which gives me a kind of a vantage point of the two. As part of it is fintech, we have today with us Firas and Fadi, who are coming from the banking world as well as from the technology world. So we want to try and tackle the subject from both sides, the retail, the technology, the customer experience. So it gives me great pleasure to welcome Firas and Fadi onto the stage. One of the things that I've been very involved in the last couple of years is very deep discussions with regulators on how to best introduce newer concepts into banking for companies that we've invested in, but as well from a consultative perspective for the regulators. And what we're seeing in the US and in Europe is a very dramatic shift in what they're willing to admit into what has historically been the sort of castle wall of the banking system. And that includes, for example, today in Europe, with the new regulation that came in January, if you tick a box on a fintech website or an app that says, I authorize you as the customer to extract my history of transaction data from my old bank relationship, the banks are legally obliged to comply. And so what that means is that we now have services springing up in fintech where your bank app or your bank website will, for example, search for alternative telecom providers to the one that you're using, right? Because they say, okay, you're paying above average, we can get you a discount. Your insurance is too high, we can get you a discount on that. So the bank relationship is kind of changing from the experienced fintech side that is abstracting the bank balance sheet from the relationship of the bank with the customer. And that's a really big thing because historically, banks have used their balance sheet as their protective moat, right, to the deposits and the loans to keep the customer and have a very high barrier to leaving. And now the regulators are removing that and saying you have to comply with these new things. So the banks are responding. In the US, since 2010, about 10,000 bank branches have closed down. In the US now, you can scan your check and the bank will process a check that you've scanned. So we went from branches to drive-through to just scanning. And so the branch network, which historically has been an asset, now is being questioned. Is it an asset or a liability? And so here we have Firas, who has been an entrepreneur. He's been the chief digital officer of a major bank in the Middle East, in Saudi Arabia, is now with Innofis, which does a digital transformation for 7 out of the 10 largest banks in the Gulf. And he is very well placed to give us his perspective on the technology aspect of it and the customer journey and how they do. Fadi runs 113 branches, as well as the retail banking, or part of the retail banking side of KFH, and is living through it, innovating, managing, and transforming. So I think maybe we'll kick it off with Fadi and see what is your experience, what are you seeing, and what are you doing to move forward?
Thank you for the beautiful introduction. If I'm to answer your question, so 1, the bank is an advisor. 2nd, the bank against fintech. 3rd, the bank with the regulator. And 4, the bank against the other innovators in that context. And let me contrast this with the opening that came in, because it just threw from Dr. Anderi. It just threw a beautiful dimension on what we're here to talk about, because most of us are here to make money, right? So a startup looking for a 10x valuation or a 15x, depending, and banks to try to make it through the fiscal year. And then the opportunity and the duty of the unbanked and the underbanked as well. So let's bring that moral obligation of banks as well. 1, regulators are forcing us into a dimension which the costly dimension, right? So between KYC and FATCA and AML and CFT, the cost of risk is becoming way too heavy to bear, which forces you to look at your other income channels. And it forces you to prioritize the change that you need to do. So can you change at the pace that you'd like to? No. Can you change at the pace of 100 people in the room trying to innovate? No, you cannot. So you have to prioritize. And the regulator is protecting us in a way from being too innovative and going down a route which is costly, right? So 1, this is one of the challenges that is forcing us in one direction. At some point in time, PSD2 is going to come to the region, and the GDRP, or whatever it's called, GDPR as well. And banks will have to open up, exposing themselves now to innovators. On the other side, the customer experience is another threat or an opportunity for us, because you get all the fintechs in the other floor trying to improve on the customer experience, and banks are still mentioning telex transfer. No, but no, what's a telex transfer? You know, I need to transfer money or I need to pay. So bank-centric now is at risk, and customer-centric is the new win. And you've got the massive players of the Googles and the GAFAs forcing you to raise the bar. So,
GAFA, do you want to explain GAFA?
Google, Apple, Facebook, Alibaba, Netflix,
so
maybe.
So the non-regulated,
the non-regulated, non-banking institutions.
Right.
So these are the two forces, external forces, right, that we're facing with. So the regulator is forcing change, costly change. The customer experience is forcing us to change as well when, you know, payments are disappearing and the bank is disappearing. For those of you who came here today with Uber or Kareem, Kareem is operating here, right?
Yes.
Right, Uber or Kareem, did you even touch your wallet? You didn't. You took away the only product that lives with our customer, which is our credit card or our debit card. And we proud ourselves because, you know, this is where the logo lives close to your heart. Now that has disappeared and it's your phone sitting on the other side. So we have to change, right? Is it today? Is it for 3 years from now? Depends on your priorities.
And are you seeing pull from the customers to change, or are you trying to be ahead of what you think that they will want from you?
We'd love to be ahead, but we have very tight budgets to manage, and to be ahead, you need to test and be willing to fail a lot more than succeed.
Okay.
Banks don't do that well, and regulators don't allow you to do that, right? So change is very costly and a lot slower than we'd like it to be. Okay. So being ahead, at best for the ego side of things, not the economic side of things.
Firas, in your experience, when you're approaching banks about doing this transformation, is it that there's a pull there, or there's a push, and how do you approach it with them?
Yeah. First, thank you very much for having us here with you. Lovely city and lovely people. Thank you so much. It's always a pleasure to be in Beirut. Actually, you tackled a couple of, actually 10 concepts here, not a couple of concepts, Fadi, but maybe we're talking here about the fintech. We're talking about the digital transformation at the same time. Actually, you cannot separate the two subjects from each other. You know, regarding the fintech, I love the expression that Fadi used when he said regulators are protecting us from being innovative. So it's, I don't know, it's like very...
If you quote me, I will deny. It wasn't me.
Everything is recorded here. So it's very interesting that regulators now is trying to be defensive in terms of the fintech companies. And I can see this in most of the region countries. I don't want to exclude any of the places here in the region, but like this is like very normal. We previously I was like the chief digital officer for Saudi Investment Bank, other banks as well. We in bankers, now I'm the other side of the game. We bankers tend to be protective when it comes to our customers, to the money that our customers have. However, this is going to be like history in a few years of time. I remember when I was like a speaker or a panelist, and 3 years ago, 4 years ago, we were talking about alternative channels. If you remember, we were talking about digital as a secondary and third channel in the banking industry and even the retail industry. Now, I think branches, Fadi, is the alternative channel. It's not anymore the digital channel is the alternative channel. You mentioned Uber. We don't care about calling the driver of Uber. What we all care about is to get the best service. And so let me get back to
is that the case? Are your clients, the banks, really thinking of the branch as the alternative channel? Has the mind shift happened?
Yeah, it depends. Actually, when you look at digital transformation, you need to understand the segments that you are serving. In banks, we have the millennials, we have the affluents, we have the normal customers. I think now, from the age, I'll be very careful when mentioning the ages here. Millennials maybe 50 and under maybe. No, actually, we can see that most of the customers now, we have, in Saudi, for example, we have around 40% of our customers are digital channel dedicated customers. So this is regarding the digital transformation.
And does that mean that they came in through digital?
No, it means that they adopted the digital at certain point of time. Okay. Maybe the end-to-end customer journey is not yet complete in most of the banks, except maybe 3 banks maybe in the region. But I would say that after, if you provide like most of the services in digital channel, you definitely gonna gain the customer heart. Yes. You asked a question about fintech, Hadi.
Yes.
Regarding the fintech, so maybe.
Sure.
Maybe.
He opened the point of branches.
Yes,
So
yes.
you had 4 questions, you had 10 points. I have 1 billion.
Oh, you're counting, okay.
I have 1 billion. Okay, let's.
But no, branches is this.
So
it's
is
a really
branches? Okay. Okay. How much of our revenue today is fintech and all of this? Not much. Because we all want to be part of that big thing that's happening, right? So we want to invest. We want to be seen. There's doing and be seen as doing. Right? Why? Because that attracts the next revenue, which is youth. So being seen as doing is not necessarily the same as doing, right? And youth today in the GCC, we're at 50% below 21 years of age or 22 years of age. So my revenue, 3 years down the line or 5 years down the line, is going to come from the people that I acquire today. And acquiring them in branches now is more of a question mark. So do you acquire digitally? Will the regulator allow you to acquire digitally?
Do they allow you?
But it's a very big question, right? So depending on the legislation, in certain countries they will, in certain countries, you still need a blue on white, not black, blue on white signature in the branch, in the presence of an officer of the bank, right? Yeah. So it is 5% of our revenue today, even less. And it's a lot bigger in terms of costs, in terms of cost of new projects. So are branches disappearing? No, because my 95% of revenue today is taking place to a large extent in branches. This is where my sales is, my advisory happens, where my cross-selling happens. So all the activity is happening there. Now what we're seeing is a shift of balance between the branches and the digital. That does not mean traffic to the branches that's changing. And this is where, again, you start segmenting and looking at not the big data, the small data, right? So 4 segments of your information, of your base. Who's coming into the branches? How do you serve them best? Digitally in the branch. Right. On the longer term, branches will change.
Maybe you can go into that in more detail when you're talking about that
segmentation.
The segmentation of having digital in the branch and digital outside the branch, and that what you just said, that though you have digital growing, the branch footfall continues to be the same. Is that, did I understand that correctly?
No, well, yes and no.
Okay.
Right? So we have around 113 branches now, 120 in Kuwait.
Right.
Around 500 globally. Right? The drive for branches is a CASA drive. At the end of the day, you still need to acquire customers. And not everybody wants to be acquired digitally, because it comes to the next best thing to your family, the next most precious thing to your family, your money. Right? So you're not going to just log in using your, I just used this example not so long ago. If you were, my wife now is big on Pinterest. And with at Pinterest, if you know it, you can log in using your Google ID and using your Facebook ID. What if you could use your bank ID to log into Pinterest? Would you? Would you? your money's there. You wouldn't. So as much as a bank likes to be with Google and Facebook, hey, you know what? When it comes to my money, keep it on the side, keep it inefficient relatively. But I don't bring my wallet into everything I do, right? So we still need to acquire customers. They still need to feel safe, knowing that this is separate from everything else that they do. We are changing branches because the generation is changing and the customer experience in branches is changing. The example we just used, why is Apple opening branches? They don't need to. How many of you have iPhones and how many of you bought it in an Apple store? Did anybody buy it in an Apple store? No. You did? Okay. We have one. So they don't need to, but it's living the Apple experience.
So what are the kind of digital things that you're putting into your branches to attract the next generation of customers?
It's so 1990s, it's not funny. So we don't have an app that's an in-branch experience, but what we're doing is the digitization that Firas was talking about.
Okay.
Right? So that departmental view of banks, because for those of you that are in banks, you've got a cards department, an assets department, a lead management department, probably analytics if you're spending the money, and you've got compliance, risk audit, and all of them have different operating procedures, which the customer has to go through individually. Mm-hmm. But what now is happening is, and that's impacting the branch, you have a customer voice now in the banks. So maybe some of you have a voice of customer initiative somewhere, and there is somebody that actually represents the customer in the bank, or not, maybe. So this is now a committee that reviews and approves the customer journey. So what are the touch points? If you want to, okay, you wake up in the morning saying, I'm gonna transfer money to my son that's somewhere, not to go to the bank. So what do? You actually to go to the, to log in or to the app. How is your experience there? Then how many clicks does it take you to transfer the money? Do you still need to add your son as a beneficiary and wait for an SMS to come in? Okay, this is 3 minutes, and so this is where it's coming in. We're changing that experience. The footfall is going to remain because when it comes to you taking a loan of $100,000 or $10,000, we want to make sure it's you, and you want to make sure that your chances are as high as possible.
And Firas, are you seeing the same in other countries in MENA?
Actually, again, we're talking about the end-to-end customer experience. We're talking about customer onboarding. Yes, there is still some rejection, some resistance regarding the onboarding, but there are workarounds that has been adopted in many countries in the region for customer conversion. Actually, if we want to think about the customer lifecycle doesn't start with the customer who wants to open an account. Maybe it starts from the social media where the customer is interested in banks, maybe, or interested in to know more about the available banks in your country. The question here is not how to allow the customer to open an account in my bank in a digital way. I think the question should need to be a little bit earlier. How to know those who wants to open this account in my bank or maybe other banks.
So how do you target?
How do you do the proper segmentation and analysis of the social media and know how to go to the right customer pools or lake pools, and then how to attract them to my bank, and then how to do and ensure the proper conversion rate of these customers. Okay, maybe this is a little bit early, maybe I would say, but going back to the conversion and to the, let's say, to the customer onboarding, yes, there are many ways to avoid the blue on white, maybe black on white. Maybe.
Black on white is not acceptable.
Okay, yeah. So I'll give you an example.
Yeah.
Like applying a full end-to-end customer registration with a copying services or with the imaging services in the app, then allowing the customer to take an appointment through the app and then go to the bank just to make the signature maybe, and not just to the bank, maybe to a certain line of the bank. And here what I told Fadi maybe before the panel about, which there are many external and internal challenges that will face during this process. The question here, who's going to allow you to, we as digital transformation people, we're not allowed to touch the branch. The branch people are monsters, you know. I mean, they want to protect their...
Is that right? So when you do your digital transformations, you really think that I'm not going to
I'm not going to tell, no,
really?
You really tried. The problem here, maybe many of the, you know, I was maybe kidding when I said like the resistance, but maybe the proper term here is to use is the proper alignment. The problem is, do we have a full bank strategy to transform and transfer these services to a fully or partially digital? Then how the top management of this bank set the strategy and the objectives and align the departmental strategy, the horizontal strategy of all departments to work all together. This is the question here. Okay. And then the technology question comes to be answered.
So it's interesting when you said about the timing and the difference, because in different parts of the world, you're seeing regulators approach things at different speeds. And does that mean that in MENA, if we are looking at what's happening, the banks have an ability to preempt the assault on the banking system that is happening in other parts of the world? Or is it inevitable that they will have to seed clients to fintech companies and then acquire them? Or is it the case that when they're hiring you, they're really saying, I can preempt it and I can compete with the fintech?
Mm-hmm. So question?
Either.
Okay.
Fadi?
Okay. It's a very big question.
Yeah.
So there's an assault somewhere from regulators, fintechs?
From new startup fintech companies
right.
are attacking the historically closed banking castle.
Okay.
Mm-hmm. And regulators are now cooperating with them in that, in more and more, but in varying degrees of speed between the different regions.
Okay.
Right. And
so let me bring in the regional variances.
Exactly.
Right. Okay. PSD2 came in because let's go back to 2008, where too big to fail is a very, very big issue. Too big to fail was a systemic risk that dragged the whole world for now 10 years. Fine. And we just had that spout of volatility a few weeks ago where people thought the world was ending again. Right? So now, too big to fail is an issue for regulators. And how do they break this down? How do they protect the smaller investors? How do they break up the banks and force them to open up on a lot of things and allow that mobility? PSD2 is one of the reasons why this is happening. Because now you need to challenge the big guys. And you can really only challenge them with agility that the smaller banks do not have. You need budgets, you need size. You need an IT department that's the size of a bank to do that. So PSD2, my view, PSD2 came in order to allow to break up the banks. Right? Okay. And that's happening. Is this a concern in our part of the world? Not so much. Not so much because the regulation is playing a much bigger role, because there are no banks that are too big to be systemically risky, right? So the drivers are different. However, let's talk from a customer perspective. So that's the regulator side of things, right? How are we doing on time?
We're good.
We're good?
Yeah.
Okay. So from a customer experience perspective, again, yes, we would like to improve this, and the regulator is facilitating this. But okay, let's take another example I commonly use. If you read about Uber today in the news, right? Is it positive or negative news? Negative news. Why?
No.
Because Uber innovated and then dealt with the consequences. I wish we could do this. As banks, you deal with all the consequences of everybody and their mother, and then try to innovate. So you've got, again, risk and what have you. Okay? So we'd like to change the experience, but we cannot. So different drivers.
Understood. Firas, when you are doing as a software and consulting company, the digital transformation for the top banks, are they coming to you and saying, I'm afraid that a fintech is going to take my market, or are they coming to you to say, how do I extract efficiencies in the back end?
Okay, it depends whether we're in June or July.
Okay.
Actually, yeah, really. No, this concept of competition with fintech, I think it's going to be changing in the coming maybe 1 year time. I'm talking about Saudi, Emirates as well, maybe. The main reason for this is that, you know, even the regulator, we were talking about the regulator in some countries, but for example, now in Saudi, they opened the sandbox concept, which means that most of the banks, actually, they selected 10 banks now, and these banks need to adopt at least 3 fintech ideas. So now the banks are moving from the resistant side to the demanding side, I would say. However, they are still cautious when selecting the ideas. You know, I don't think we have a problem in the region. We can just, we don't need to reinvent the wheel. There are very much successful ideas in Europe and the US regarding the fintech, starting from the onboarding to the upselling, cross-selling, down to the services, the cross-selling of services like insurance and loans, housing. You know, all these are very successful ideas. And now we, as banks in the region, we don't need to reinvent this. We just need to go and check which ideas were more applicable to our environment and have these ideas to be implemented at our side. The question here is that, do we have the business well, and do we have the IT capability? And here's where our customers coming back to us to make sure that, you know, we're not talking about IT here, we're talking about transformation, which means that you need to understand the right channels that you need to tackle your customers when talking about the fintech. Fintech is not anymore online or even mobile or SMS. It's the 3 of them. It's the omni-channel plus the fintech channel itself. So like the question or the example you gave, Fadi, do you allow someone to get your username and password? I think when it comes to fintech company, we are finding now that customers are more accepting the idea of sharing their username, I don't say username and password, but maybe a token number for a limited services that you can allow the fintech company to be part of your customer experience.
Great. So what I'm taking away, because I will need to end it soon, what I'm taking away from our discussion is that in Middle East, North Africa, the regulator is still a very powerful figure in what they allow the banks to do or not to do.
Right.
Today, the revenues that the banks are making from digital services are still so small that they're focusing much more on the digital transformation at the back end in a way. The fintech companies that are startups that are coming up, that are attacking the consumer from a different angle, still have a very wide space to play in. And over the next few, hopefully a couple of years, we'll see perhaps the regulators try to reconcile the position and see how that goes and if any acquisitions transpire from the banks to the fintech side. Thank you very much.
I think I have to have the last word. But okay, thank you. Thank you. I think if there's something that you lose sleep over at night, right? What would it be? As a banker, just like a last question.
You're the banker.
I know. That's to your point. Blockchain, I think, is going to be.
Sorry. Questions from the floor.
So they're going to ask this question.
Well, why don't we, while we gather questions from the floor, why don't you tell us what makes you lose sleep at night?
لا مش lose sleep at night. لأنه some of the things that I think we're still we don't understand, and I think we want to be a part of it. And a lot of you are going the wrong way around it. Is investing in Bitcoin, right? Blockchain, I think, is going to be a fantastic shift in the banking industry. I don't know. Everybody's dabbling with it.
No, but are you engaged in conversations with them? Is that something
We are.
like as
in Kuwait, let me
banks?
tell you, okay, one thing. In Kuwait, as an example, there is a Kuwait National Payment System project driven by the central bank, part of which is a cryptocurrency. So that's the first attempt into, right, applying distributed ledgers and what have you to one part of the banking solution. What I think, there are three verticals where the blockchain is going to come in and change the game. One is on digital identity, so a crypto identity. Second, on a cryptocurrency, and then on crypto transactions. Then the bank needs to really reevaluate the role they play in the ecosystem. Because right now, the central bank trusts us with ensuring that you is you, and that your money is going where it's supposed to go, right? So is your money your money? Where are you getting it, and where are you sending it? You apply this on a distributed ledger, then what do I do other than evaluate your credit worthiness and then give you money and ensure it comes back? Or give you a payment facility or a payment mechanism. So I'll then become an issuer of credit cards and a storage place for your money. 10 years from today, blockchain, I think, is going to be...
Can I just expand on that, because you've posed the problem, and you've also answered, the initial thing of saying that you're extracting the balance sheet from the equation, right? Mm-hmm. By then having to deal with customers in a different, in a consumer-friendly manner.
Yeah.
How much are you engaging with the regulator and through the bank to get ahead of that, or will you wait for the regulator to say, I now accept blockchain payments?
You don't speak, okay, the regulator speaks to you. In general, you listen, right? So the conversation is happening. And the more the conversation happens, the more the regulator now opens up to it. Is there a timeline? I wish there was. There isn't. Banks are playing with it. So you'll see Emirates NBD and ICICI now doing it on the back end, right? So transfers. Other banks are also opening up. The regulatory-wise, Dubai is always at the forefront of doing this, supported by the government, right? So there's the DIFC, the Hive project, many initiatives. In Saudi, the sandbox where blockchain is part of it. In Kuwait as well. Everybody's trying. Today, it's not standardized, and it's not very clear how this is going to play out.
So,
Fadi, sorry, let me comment on this. Actually, regarding blockchain, I think we're jumping to conclusions. I mean, blockchain is like the ultimate design of database and transactions that we are looking to have. The problem is that we still have many steps that we can take before blockchain. It's like we don't have the normal currency simple transfer in most of the countries, yes. In most of the banks. Like the simple e-wallet is not yet regulated in many countries. So how do you think blockchain is going to work if you don't have a mean for this? So I think there are many steps the banks in the region and the regulators can take before jumping to blockchain. Blockchain is important now, right, so that we are well prepared for like the cryptocurrency and for the distributed ledgers. Still, the means for cryptocurrency and for blockchain is not in place to enable the adoption.
Let me answer quickly also from a technical perspective with blockchain, because I've been involved in that very deeply for the last 2 years. Today, blockchain ledgers, by and large, don't give you the privacy that you would want with your money if it were the bank, right? So right now, it's pseudonymous, right? But it's not hidden in such a way that the bank can say, I won't tell you what those transactions were.
Yeah, but it's a public ledger. Yeah.
This is being developed, right? So with both as add-ons to the Bitcoin network and to the Ethereum framework, as well as newer blockchain protocols.
But I think that's the power of it.
This will probably be the key factor for banks adapting it and adopting it.
But do you think that issues of transparency or like thereof are the reasons why banks are reluctant to kind of adopt blockchain? Because, I mean, at the end of the day, it's a public ledger. Everyone will know where these transactions happen and how they happen. Do you think that that's like they're afraid that maybe their clients don't want this kind of exposure?
Let's ask the real question. Would the regulator like to see everything that's happening?
Of course.
It's a rhetorical question. Right? What is the answer to this? One, how many, sorry, what's your name? Muhammad. How many Muhammads are there, you, in how many banks? And none of them is the same as the other. So Fadi now is assuming in a bank, a certain Fadi. In another bank is a different Fadi. And in a third one, he's completely different. And I like to manage those. Central bank doesn't like this. The regulator does not like this. He likes to know who is that person. That's your digital identity. You tie all of this together and tie it to something social at some point in time. Transparency at its best time. Add this your financial wealth, your assets. Beautiful. Let me answer the last thing. So yes, you're right. Okay, let's talk about the overbanked, the unbanked, the banked, the affluent, and the underbanked and the unbanked. Now, blockchain is addressing a problem that banks could not. Let's talk about charity. The opening, we'll go back to the opening, right? Dr. Andari spoke about the poverty level and about all of those. One of the problems of charity is the dollar that you send out, the $100 you send out. How much of it actually reaches the people in need? Do you know? Sorry, let me finish. This is where blockchain is coming in, and there are many startups that are saying, you know what, your $100 is now 100 crypto dollars, and you're going to actually be able to track it all the way till it gets to a Fadi in need or a guy in need, and you'll know if it's going to go for water, education, electricity, or health. So maybe, just maybe, blockchain is the solution to what you're talking about.
I mean, just I'm the least person you have to convince on blockchain. I think on the questions we're doing fine.
Okay.
But I'm going to put you a little bit on the spot because you brought up the blockchain question.
Yes.
And when I look at the blockchain and the cryptocurrency digital first world, not only do you abstract the balance sheet from the customer experience, you also very much remove the need for a bank branch. And so and then I come back to what you said at first, which was that even though you're adopting digital, you expect that branch footfall remains the same. How do you reconcile the two, and is it,
that's Muhammad's question. So your question is 10 years today, or 5, or a week today?
What do you expect?
Okay, branches are going to still be there for the longest time. But a lot of institutions in this world are based on inefficiencies, right? If the world was extremely efficient, a lot of organizations that are in this room would not be needed. For the foreseeable future, and until we're no longer millennials or even older, branches will exist, branches will multiply in our region, I think, and digital is still trying to take over. Something that where, you go on a tangent and then changes the game is when fundamentally the regulator adopts something new that says, okay, now the inefficiency is no longer there. How do you adapt to it? 10 years today, branches are, in my view, are still going to change and to grow or stabilize. We will still be there.
Great.
Right? But
Doing more
adapt.
efficient things
So
Doing much more efficiently.
and profitable.
Sorry, that's why, remember that example of departmental? This is why an application form in the bank is 16 pages, because each department wants one. Okay, bring all of those together into one signature, and then you're...
great. We have the stop sign from Sareen, so thank you very much. Thank you, Firas. Thank you, Fadi.
Okay, thank you.
Well,